Hello guys, hope I am on time this time. My name is Abdelkarim Ramain, and in this live presentation I will be speaking about how penny stock traders make huge money. Now understand that this topic, a lot of people when they begin as traders, they always have this idea of making huge money in a short time and with high percentage. Okay, so this is the idea, and this is why most of the people who trade as compared to the people who invest. So people who invest, they are not worried to make money now, because investing as compared to trading is a habit, and it is for the long run. That's why a lot of people they don't really understand what they are doing. Okay, when they are like trading, especially when they go to the most volatile stocks, which are called penny stocks. Okay, now this is, most of the people think about money and high percentage, but they don't think about risk. Okay, they don't think about risk. It means as if you want a lot of money and you don't want to risk anything, and this is the problem with penny traders. So that's why they go to these penny stocks, and understand that penny stocks, we have, before we speak about trading them, there are two kinds of penny stocks. Okay, so now first, what is this penny stocks? Penny stocks is just small, thin stocks. Okay, it means in real they are just small, very tiny companies. $500,000, 1 million, 5 million, 2 million, $7 million. These are very tiny companies. So its price is always very small. Some cents, like 10 cents or 1 cent or 20 cents or $1 or $2 or $5. Under $5, they are called penny stocks. Some they say it is under $2. It depends. But I'm telling you that this penny stock idea, there are some stocks that are not penny stocks in real. That means they are not small companies, but they are big companies. But they act, it means they behave as penny stocks. Why? Because of the movement of the stock. The stock can go in a few days, 1 day, 2 days, 3 days, 4 days, or 10 days. It can go 20%, 60%, 100%, even if the stock is big, like $100, $500, $600. Hello, Wiseman. Thank you very much for coming. So always people they are confused with this penny stocks. Okay. So we said penny stocks, we have two kinds. There is one kind which is manipulated, and I have made before in my videos scams in penny stocks. People, they push stocks up, they push stocks down, they put some scams, and this you will find it clearly. You will find these stocks very volatile. You find a stock that it is $1. The volume is very low. It means no one knows this stock. Let's say the volume is 5,000 shares traded a day. It means it is nothing. It means there is no one there. Few traders. Okay. The next day you find this stock goes to $2, $5, $4. What makes this stock go crazy like this? So people, when they see stock that was $1, the next day it is $2 or $5, they get greed. And this greed is what motivates the day traders. You say, man, I put 10,000, tomorrow it will be 20,000. This is the trades I'm going to do. But in general, they don't understand that the first type of stocks that I'm speaking about, they are manipulated. And no one, believe me, no one will try to find out what is this, because there are thousands of stocks and each day they go up, they go down, too much up, too much down. Sometimes people, they lose a lot of money. Suppose that you are in a penny stock. Today you bought it at $1 and you think you see it going up a little bit, or it doubled. For example, today is $1, tomorrow is $2. Now you jump in. You say it's an opportunity. The other day it may be $300 to like $3 or $5. I will make money. And then you see next day you lose 80% or 70% or 90%. You lose almost all your money. So when you lose all your money, that's it. It means you enter to a stock that it is manipulated and you get caught. And then you bought it at $2 and now it is 3 cents. What does it mean? It means you lose almost your money. You put $10,000 or $5,000. Some people I know, they are crazy with they put $50,000 and $100,000. It means they are crazy. They like this kind of stocks. But you know, there are some people who are rich and they like to play with these stocks just for the sake of playing. They short these stocks, they buy them heavily, because it's just a game for them. Sometimes they make money, sometimes they lose money, but they don't care because they are rich, and this money that they play with is just a little bit of their money. So it is just a passion to play these stocks. Okay, so this is the thing. Hey, Top Series, I say thank you for the live. Welcome, Top Series. Okay, so these are sometimes kinds of people. Now, other people, they come to trade. Most of the people, they don't have money. That's why you ask him why you don't trade the bigger stocks like $10, $20, $30, or $100,000, or $5 or $3,000, $2,000. He said, "Oh, okay, I don't have money. I love penny stocks." It's not because you love penny stocks, because first you can't buy other kind of stocks. Although even if you buy bigger stocks and they are moving good, you will be making money. Okay, check for example Tesla. Tesla in the beginning of the year, it was only $250. I have made a lot of videos when I explained that. $250, it goes to $2,200. Okay? You see how much it goes? It goes nearly 1100%. Okay? So the percentage that matters. It's not only penny stocks that you can make money and huge money. You can make huge money even with big stocks. I give you the example of Tesla. Tesla I think in March it was only $250, but it goes to $2,200, and then they do the split, and now I think it's 300 something. Okay. So you can make even money with the bigger stock. So what counts is the percentage, how much you make. Because if you buy only one share of Tesla, it was 1,000 for example. After 2 months it go to 2,000. Well, what did you make? You make 100%. Whatever you put 1,000, you put 5,000, you put 10,000. It doesn't matter. What it matters is the percentage, but the people, they don't understand this kind of percentage. That's why they think that smaller stocks they can make more money. Okay. Hello, Nasa. I haven't seen you for a long time, Nasa. Where have you been? Okay. So, as I told you, penny stocks are the first kind I'm speaking about is the stocks that are manipulated. Okay, so now because I'm speaking, some people they don't understand very well what's this manipulated, what's this scams, what's this, what is the Security Exchange Commission to fix that? No, they can't. They can't because we have millions of traders. We have thousands of stocks. We have this Security Exchange Commission. They can't find out with these small companies that go up and down. It's very frustrating to follow this because there is no rule. Now, what is the rule? For example, today is a stock $1. Tomorrow you find it $5. What is the rule? Do they go to the company, they say what did happen, or did you announce a good announcement, or they go to the company is having maybe bad news, but the stock was $1, tomorrow is $5. So what does it mean? It means the company has nothing to do with this high going up and going down, this swing up and down. Okay, so even the Security Exchange Commission, they don't. Security Exchange Commission, they go after when we have a big scandal in the stock market, like big, where people they make billions of dollars because of some manipulation or because of some other time when investors are hurt and they should find out what's going on. It's sometimes it happens, but it's rare. But they can't go to every stock and see why this stock goes 10%, why this stock goes 1% down or up. They can't. It will become a big thing. So right now I will show you some just to show you penny stocks in general, how they move. Okay, at least you will have an idea. Let's see. So let's go and show you the chart. Now look at the chart. I will search, and I will show you how to search. Now you go here, you go down, you go to the first line here under stocks in blue, and you should find the sectors. I will show you some sectors. Okay. Now here, what we call morning industry groups. What you find on the left side is called the sector. For example, aerospace defense. Now, on the right, these are industries, two industries. When you enter, you find the index and you find the stocks. Now, we choose, for example, biotechnology, drugs companies, because they are most volatile in the market. Now, look here. Now, drugs, it is the sector. Most of these are drugs companies, big and small, and this is the industries. Industries, it means it is a subdivision of the sector, and we have stocks that are just biotechnology. Some they do diagnostic substances, some they drug delivery. It means these companies they don't do drugs, but they deliver drugs, so they are here. Some they are manufacturers, major other drugs related to products, and the drug generic. Now let's go to biotechnology to see some stocks. So we will begin with the smallest stocks. Now look here. Okay, so do you see this line here? This line, it means the stock has moved from $2.87, it goes to $1.18. It means it goes, let's say, more than around 60% down, and then it goes up, and it lost, I don't know, about 20% or 50%. You see this thing? Now, another thing, you have a gap down. You will never know. It is in use, or it is manipulation, or you don't know. Let's see other things. Yes. You see, for example, a stock is going very, very quickly up, 4 days up. So, for example, the stock here was 58 cents. It goes to $1.56. It means 300% in 4 days. Okay? And you see this stuff here. This thing here. See? Trading. All these are kind of manipulation done by day traders. They push the stock up. A lot of people, they come, then they short. A lot of people, they make money because they know what they are doing. And you see this stock, for example, it's 32 cents. But see how many volume we have. 142 million shares traded a day. So what does it mean? It means we have a lot of traders are playing in this stocks. Okay, see, check this candlesticks like this. Check candlestick of this. So all the people that bought at the end, the following days it goes down, then it goes up, they stay, then they have a gap down, then it go down. It means some people lose all their money doing stuff. Now you see, for example, here, sometimes stock, there is no one who is trading. Here 400 shares traded a day. Here we have 100. It means this stock, only one guy has bought 100 shares. Okay, so it's here someone has sold 500 shares. The stock, okay, and it doesn't move. So this stock, for example, VVUSQ. Vivus Inc. drug. This is stopped here. Maybe this company is sold. Maybe it is sold. Now see here, this is this in use or manipulation? I don't know. It depends. You should, for example, if you want to know the exact thing, you should go to this company VVUSK in the past, because now it doesn't exist. You should go to the news, for example, Yahoo News, and you should see the news of this company. It means before. It means on the 30 March 2020. 30. You go to that after the market close, and you see what's going on. Maybe there is earning news, maybe something. And we have a gap up, and then after the gap up, the stock, so it was $1. It goes to $4.55. And then the next day, it goes to $1.47. Okay? So suppose that someone is buying here and he leave it for tomorrow. He's thinking that the stock will continue to go up and then collapse, and then someone loses all his money. So let's... now, when the stock move is normal, this is a normal thing. And when it became to do this, it means it's not normal. There is some kind of manipulation. So let's go back. Okay, guys, let's continue with this. Harman man, thank you very much for coming. Now, this is the first kind of penny stocks. We say these stocks are manipulated. There are a lot of scams. when you enter these stocks, be careful, because you can lose all your money, because sometimes they short these stocks in the afternoon after the market close. Okay, they just short it. Some people, they come and they short it just to make this stock horrible. In the next morning, you find that this stock lost 50% or 70% or whatever percent. It's just because the volume is so low, they can do whatever, and no one and the company cannot do anything for traders. It can't. The company cannot stop traders to do what they do. Okay. Harman Man said, "Hi Kareem, I took training level 4 and 7, very helpful for me and easy training." Thank you very much, Harman Man. If you have questions, Harman Man, just send me an email. I will help you more and more. Saba, salam dear, salam. How are you? Now let's go back. Would you talk about day trading? Yes. I will talk about day trading in this session. Now I'm just giving a general definition and kinds of penny stocks. Now we have penny stocks. We have the normal ones. The normal ones, it means most of the time there are no scammers, there is no manipulation. You find the stock is going up, good. There is no big fluctuation, it's going up. So hope when we search, we can find some stocks like this. Yeah, you see this manipulation here. You see, from $1.68 it goes to $4. This is a kind of day trading manipulation. There is a gap up here, but the day traders are very, very active when there is a gap up or gap down. They are very, very active, because here is the money. If the stock here opens now, the stock was, for example, 125 on 16 January, 125. The next day it opens 168. So there is a gap up. Okay? So from 125, 168, there is a small gap up, but the stock from 168, it goes to $4.09. You see that? Let's say you bought this stock at 168 and you stay 1 hour or 2 or 3 and it is $4.09. It means more than doubling your money. It's like 120%. Okay? So this is where you find day traders, because someone asks me now to speak about day traders. Day traders are there when there is a big movement. Now here also, when there is big movement here, from 1 to 11, it goes to 210. This is 100%. But normal trading is this. Is the people just they trade, some they don't know what they are doing, but now let's show you more. Okay, we have seen this stock. We have been here. I show you a trend. This is normal trading. The stock, for example, was 72 cents. It goes here to $1.48. Okay, so let's say from here, from 19.3 to 5. So in 2 months, this stock in 2 months it doubled. It means if you put $5,000, the trend, after 2 months you double your money. But this is the big movement of the stock. This when it is so volatile. Now here, a lot of day traders, they come. So you see the volume is so big. it becomes big, 11 million, 7 million. And here it was, see when the trend, when it is normal trading, this stock is only, as you can see, the volume is 136,600. It means all are less than 326, 200,000. It means it is low. It is low volume, but the stock is going up. But what happened here? What happened here is 22 million. Here, 7 million. Here, 3 million. You see this here? 8 million. The other one, 21 million shares traded today. Now, how many they trade today? On Friday, it's only 1 million. You see when the volume drops too much, because there is no too much activity, and the good trading. What I do always, I trade this. If I want to trade a penny stock, I trade this. I trade the trend. Now here, I don't stay that much because it will become very, very volatile. Yes, you can make money, but if you are here and you get caught and you have a gap down, you don't know even what's this or why, so you lose all your money. Okay, so it's very volatile. Now you see here, you see how the stock moves. It just jumps from one gap up, another gap up, another gap up. Here another gap up, and it falls. Here another spike, another spike, another spike. You see here a gap up here and another spike here. So all these are things that some people, some day traders, they want this because they follow these stocks after the market close and see what's going on. If there is something good, they can jump and they can make a lot of money. But this needs to follow the news a lot, because without the news you will never know nothing. You see, $1.22, it goes to $3.59. Now let's go back. Okay. Now, what I teach is to follow the trends, because the trends are very peaceful. If there is a trend, you follow it, you will be making your money bit by bit. You will have a high percentage without being into a big risk. That's why when I teach penny stocks, I don't ask them to go to most volatile stocks. Okay? Because if you go to them, understand that you can make a lot of money, but also you can lose a lot of money. If you are okay with this, you just go and find some techniques to follow the news. Because most of the day traders, they do penny stocks, they always follow what's going on, what's this, is there any news? So they are always following news about this company. They see the market, what they say, analysts, what they say. And if they find, for example, a new news, they go and jump and buy this kind of stocks and see if maybe they can make some money. Now, let's go to the other kinds of penny stocks that some people, they do trade, which is called over-the-counter stocks. Now, these are called over-the-counter stocks right now, or they are called pink sheets stocks, okay, or yellow stocks. You know why they say pink sheet stocks? It means before, in the beginning of the 20th century, they use a very cheap paper to list the prices of these stocks, of these companies. That's why they call it pink sheet stocks. Okay, this is I think this is the why they said it. So these companies, here is the problem. These companies, they have a price, yes. Most of the time it is cents, 1 cent, or sometimes under a cent. Okay, your broker, if your broker is dealing with penny this pink sheets or over the counter, you can ask him. You can ask him how to find these stocks. He will show you from your thing, because most of them you should do them. You should click to them by yourself. It means you know them. You know what you are going to do. You are not in the regular market, because understand now. When I'm speaking about penny stocks, I will explain to you how dangerous are these companies' stocks. They are not normal. Okay. Yes, you can make money. The price is going up. You can see the price is going up, is going down, like any other stock. But sometimes it is volatile. It is people who are speculating. For example, they say bad news happens today to this company, so they sell short this stock. The stock can lose 80% or 70% or 90%, even if it is less than 1 cent, because I understand it's all numbers. You don't care about what you buy. The percentage is the percentage. If you lose 50%, it means 50%. Even if the stock is 1 cent, you will lose half of your money that you put. You put $1,000, you find $500 next day. So always think about percentage. Don't think about the price. Now, most of these pink sheet stocks or over-the-counter stocks, they are companies that are not regulated. This is the most important thing that I will tell you in this session. They are not regulated. What does it mean? It means they don't file anything. They don't tell you if there is an insider trading. For example, the CEO has information that the company is having a good deal next week or tomorrow. Today he will go like the trading day. He goes today and he bought 1 million shares. It is 1 cent or 5 cents or 10 cents. Okay, and tomorrow he will announce the good news. So what does it mean? It means he bought at 2 cents. Tomorrow it is 10 cents or 20 cents because of the news, because people are following. Day traders, they come to buy. So what does it mean? It means he put 1 million, he get 10 million or 20 million, and then the next day he sold them when these people, these traders, they come and he sold them. And this transaction, he will not declare this transaction. It's like insider trading. It's like but these guys they don't share with the public. It means with what we call investors, because some people, they invest in these companies, yes, but these companies are obscure. It means they don't give information. They don't give all the information that you need. They don't file anything. They don't say how much money they make. It is just a company like this, and they are not obliged. This is the most important thing I tell you about over-the-counter, because a lot of people, they don't understand. They go to trade things, but they don't understand how risky. Especially people who are having 40,000, 100,000, 50 or 20,000, and he throw them in this stock thinking that he can double his money or triple his money. It can, yes. It can, he can. Sometimes, by luck, he can. But sometimes, he will lose all his wealth. All what he has, going to 70% or 80% or 90%, he will lose everything. Okay? So, in general, this is the over-counter thing, but for me, when I'm teaching, I don't go to this kind of stocks, because our chart that you see now, which is a free stock traders, They don't give over-the-counter or pink sheet. I don't know if they have it. So let's go and check. I have no idea about them. Let me see the thing if they have them. So Morningstar Index. Let's see if I find something. Optional stocks weekly, shortable symbols, TB market indicators, warrants, charts with drawings. Let's see this. I'm just trying to see the indexes here. If I find this finish, I think they don't have this. No. For the ETFs, they might have some, but they are a lot. You see these ETFs. There are maybe hundreds or thousands. I don't know how many we have, because they can create them, they can delete them. So I'm not going to waste my time looking at all these ETFs. Okay, let's go to something else. Okay, let's go to something else. Saba, thank you. Pablo, hi. NASA, most of pump and dump occur in pink sheet over-the-counter stocks, NASA said. No, listen, manipulation happens in not just over-the-counter, but as I showed you, when there are a lot of spikes, you don't understand what they are. They are not earnings. Because, listen, earning news, even if it is bad, you have a gap down, or if it is good, you have a gap up. This is understood, because a lot of people, they come and this is normal. The thing that it is normal is the stock, the company has nothing, has no news from where the stock goes up. Okay? The stock cannot go up by itself. And millions of people, they come to a stock and they buy it in the same time. This is strange. It doesn't occur normally. So that's why in this kind of trading there is some problem. Okay, there is some problem. But in penny stocks also, there are people who talk about them and give advice, give suggestions, and these suggestions, most of the time, it is related to scams, to a lot of things. Okay, because you see those stocks always we have. Why we don't, for example, you see bigger stocks? Why you don't find this kind of manipulation in bigger stocks? Do you see the difference? Why, for example, Tesla today, let's say it is $400, and the next day you find it $5,000. Why? Because in order to push this stock, there should be billionaires who are pushing this stock up. But penny stock, any stupid person can push a stock to go up. Okay? Any. Because penny stocks move because of the low volume. Now, if the volume is so high, it needs more money. Because how the stock moves up, it is just so simple. You buy more, it goes more. Especially when the volume is low. like 1,000 volume, 50,000 volume. I just showed you a stock that it was like 200,000 volume, and then it goes to 10 million, 20 million. How it goes to those is just because there are some people who spread the news that these stocks are going high. So the people, they just jump without thinking. But sometimes they make money because of this hype, because of this bubble. They create something which is not normal, like a trend, because a trend is something that it is based on something on people like swing traders. The day traders, they buy, but there is no big news, so they can buy and sell. But it doesn't matter that much. But swing traders, speculators, they can buy and wait. That's why you see the stock is going up and up and up and up and forming a trend. We have seen in our trading account this year many stocks that we follow from the beginning, and smaller stocks or bigger stocks, it doesn't matter. Okay, now someone of the guys, NASA, I think, yes, Saba talked to me about day trading. Yes, you know, day trading with penny stocks is very, very famous now, because a lot of people, they talk about this. They talk that they were poor and they become millionaire because of penny stocks. Okay, you know, sometimes you get just lucky. I have a student. I mentioned him he bought a stock around 11. He put 11,000, and it was going up. But this stock moves so big that he reaches, I think he reaches $54,000 or $55,000, and then he waited, and the stock goes down, I think, to 40,000 or something. So he makes like 400% in this stock. Okay, so penny stocks, yes, you can make a lot of money in one single trade. Yes, it's true. But there is luck, and there is techniques where to enter and to wait. Because if it doesn't work, you should exit. You shouldn't stay that long, because penny stocks are very, very quick. And I just showed you some stocks where they move 200%, 300% in a few days. Okay? And they can fall also, because you will never know if they continue to go up or to go down. Okay? And some people, you know, they try to do this kind of stocks. But I'm telling you that day trading, it doesn't mean that day trading is safer than swing trading, because they don't see gap up or gap down. Because day traders, they don't hold their money, okay, at night. So I will give you okay. So let's give you some information. Okay, just we try to explain this idea of penny stocks. And now, so I will try to speak about what we call a swing trader and a day trader. Okay, so let's see here. So let's say today The stock is going up a little bit. This is a candlestick, a green candlestick. You want to buy it. Because for me, I don't buy a red candlestick. Never. Okay. A red candlestick, it's here. So, this is where you bought. You bought it here. Let's say you bought the stock at $1. This is a penny stock. Okay? Now, let's say today, after the market, okay, today, let's say there is earning news. And you know, earning news, it means the company will announce earning news, and it might have good news. So this is today. Now let's say tomorrow it opens here. Okay, this price. So it is, for example, $2. Now, who will buy at $1 before the earnings, and maybe tomorrow is the gap up? So this is a gap up. So who will buy? It means before earning news or whatever. This is what we call swing traders. It means you follow the trend, not just earning news. For example, he bought this, let's say 15 days before the earnings. Earnings is today. So in the next day, there is a gap up and the stock is $2. Now this swing trader has made 100% of his money. Maybe he sell, maybe he says, I don't know. So now what will happen is that the day traders, so let's say give a line here. So day traders, what they do, they work here from 4 p.m. to 8 p.m. This is where they work, because this is where we have the news. Before we have the gap up at 2, it is tomorrow, for example. Okay, it is tomorrow. We are speaking about now about today, after the markets close at 4 o'clock. Now 4:30. Now the good news comes. Good news. Let's say the company has made a deal. It is, for example, it is a drug company, like the coronavirus, like the coronavirus drugs and the other stuff that we have seen this year. Good news. It makes a drug, or it makes something that it is good news. So the stock from $1 to $2. Who make the stock from $1 to do that? It is the day traders. Day traders. That's why we call them day traders. Day traders, they don't work at night. They work in the day. Okay? After 4:30, after the news, the stock, you will see it begin to go up very, very quickly. From $1, it goes to $2 before the market close. Before the market close. It means the market after the market hours, it closes at 8 p.m. Most of the time, you see 8 p.m. You don't see 8 p.m. You say 7:59 minutes. The market closed definitely if the day traders are still active. But what the day traders do is they buy and they sell from 4:30 to 8. They buy and they sell and they exit the trade. This is the thing. They don't stay until tomorrow, because if tomorrow in the morning something bad happen, or some short sellers come or something, they will be safe. They get their money out out of the stock, and their money is in the account. And another thing the day traders do, this I will just explain because a lot of people maybe they don't know, is that some they don't have that much money. Let's say this day trader has $20,000 in his account. It is a margin account. A margin account, it means he can have 20,000 from the broker. So he has 40K. So he play with this stock. He see the stock moving. He bought it at $1.25. It goes to $2. He makes 75% of his money. So do you know what does it mean? 75% of his money he has made from $1.25 to $2. Okay, it is 30K profit. 30K. It's not 3,000. It's 30,000. Now, I'm just saying, giving you an example, okay? It doesn't mean that it should be 30K or 75% or 20% or 30%. Whatever percentage. These guys, they buy and they sell before the market close. Why? Because they don't want to keep 20,000 of the margin, because they incur interest rates. If they keep their position to next day, since they are day traders, they don't hold this money to have interest rate against them. They are very, very clever, these guys. Okay? And another thing, if something in the morning happened bad or something before them, there is one guy who is like let's say a hedge fund, and tomorrow he sees that the stock is going to $2. He wants to short it and to make it $1 again. So if you stay, you will be losing all your money and the money of your broker. So because you will have bankruptcy if you lose all this and you lose more your money, it will be a problem for you. Okay? So this is what the day traders do. So if you are a day trader, you should follow the news, earning news. You should follow some stocks that move too much, especially this kind of stocks like drug companies, because we have a lot of news. And each afternoon or the beginning of the day, always we have news, good or bad. So when there is bad, you see the people, they are selling short these stocks before the market opens or after the market opens or during the day. Now this is the play of day traders. Now the second play they do is that always when you see, for example, when you see the opening, okay, this is the open. Just to make sure you understand, this is the open. We said the open, it was $2. Okay, the stock might go up. You see it like this, might go up, let's say to $3. So even if you come here in the morning, you don't participate in this, but there is a huge profit here. Huge profit. You can make a lot of money from $2 to $3. This is a 50% money. Okay? Now, let's say it is $2 and you see that the stock is going a little bit up, and then they go down to $1. To $1, $1.50, what? So the more it's going down, you sell short. This is as easy as I told you. So you should be prepared. You have your money in your account, and you just execute orders. You have the chart, and you see what's going on. There is no sure thing. But if you see that the stock is going down for 20 cents, then it's coming back up. So you should sell and change the direction, because Day traders is about acting very, very quick. Okay, it means you should have a big response, and you don't buy to stay, you buy to make money. If things doesn't work, you should exit and change your thing. Now you lose here, maybe you put 20,000, you are selling short, and then you make a little money, and then the stock goes up, you should sell, and you should go the other direction. So it's not to prove that you are right. This is a mistake that some beginners in day traders they do, is that let's say the stock is going down and they begin to sell short. Yes, they begin to make money. Let's say they make 26 cents. They begin to see money, but the problem is that the stock stops and then it's going up. So it's going up. If you wait, all this 26 cents is gone, and then it reaches the open, and then it goes up, it goes $1. Okay, so if you see it's a stop, it's going up, you should sell this and open another position to go long and to follow the market. If the market stops, also you should stop with it. If it comes back down, you should sell short. This is how the day traders work. So if you like this, if you like actions, you should be a day trader. But it is a lot of work. You should screen, you should the news, you should have a good chart, and you should follow news. Maybe even if you have friends that are following the same thing, they can help you, or you help them. This is in general. There are some people who day traders, they make a group and they trade the same stock. Someone tells them, oh, this stock, I see there are big news and the stock is going crazy. Oh, come on. So they come together and they trade together. There are some like this, which is good. There are some who have the same account. Maybe you don't know. Maybe you don't know, but there is what we call an account that it is not an individual account, but we have a lot of people in one account. I don't know what's the name. Well, what is it called? But go to your broker and check the name of the accounts. There is one account when we have a lot of people. It means 2 or 3 or 4 friends. You put money and you trade. You can trade. Each one trades. You can just, even if you are not in the same area or in the same room, but you can enter to the account. Your friend can enter. You say, okay, you take 10,000. I take the 10,000. The other is 10,000. We are like 30,000, and we share the information. Like they are friends. Okay, most of these things happen to guys who are in the college or university, and they like this kind of stocks, and they have ideas. They see news. Oh, I see news here and there, and they trade. Okay, so this is something that I spoke about day trading. Now, for me, I do the swing trading. It means I follow the trend. I like to see stocks that go. So, I don't know, this year we have seen a lot of stocks. I don't say I have missed some stocks, but I have bought them and sold them, make some money, but they go crazy later. So like these stocks, I think I have shared last time. I think NVAX is one of them. Yes. Now, guys, those who have trading this year with me, I think I don't know if we get this this trend here, and we get some trend this here. But for me, I follow the trend that it's beginning to see, and we have traded this stock. Okay, and you see here, the coronavirus downtrend. It was from, I think, 16. It goes to 6. From 16 it goes to 6. This here is when the big trend in the market has begun. Okay, so this, let's see here. Yes, so this is the beginning of the trend. The big trend is here. I think we bought it here around 14, 15, 16. We bought it here, and we go and we have a gap up, and then we sold it, and then we have another trend, and then it collapsed. But see, it has gone to $189. Do you see when we bought it? We bought it at 14 here, $14 or $16. 14 here. It goes to 189. This is a big successful trend, and a lot of people, I don't know from my students, but we have bought it and we sold it. But you know why? Because when the whole market was moving, so you don't know which is which, so you just buy and hold and see which is going on. I think most of the stocks have been doing the same, and have been going so crazy with gap ups. Okay, gap ups, we have a lot of gap ups this year because of coronavirus, and this is why I make my speculation strategy about coronavirus stocks. And we got a lot of gap ups, like this gap up here. The stock was, let's see, was 24. It goes to 44. 24 to 44 is about 80 or 90% in this gap up. Okay, in this gap up. Now, so we say, how penny stock trader make huge money? So huge money comes with the risk. That's why a lot of people, when they think about penny stocks, they always think about money, but they don't think about the risk. It means, if I tell you right now that there is a war and we need volunteer to go to the war, like soldiers, okay? So we don't know another country, or we are going to another country and there is a war or something. But understand that when you go into a war, it means your risk is 100%. It means you might be killed. And they say, okay, we will put $100,000 in your account. Either you die or you don't die, you have 100,000. But this, it means when it is voluntary, you want to go. The people who think about 100,000, they will never think they will die, because they say, okay, I might not die, and they come back, I find 100,000 waiting for me, so I have fun, and I do this and I do this or whatever. Okay, although the people who go to the war, they are paid like slaves. They pay like slaves, and they go in order to risk their lives, which is for me, which is not good. They should give them more money because they are risking their life. It's 100% that 100% risk that you might die, or you might have you get crippled, or you get handicapped, or you get, I don't know what's the thing. So think about penny stocks. Think that you are going to a war, either you come with huge money or you come back dead. That's why a lot of people, that's why they say that 85% of all the traders lose. They lose because they go to the so crazy stocks and they want to trade them. Now, most of the people, they don't know the risk, what they are risking. Now, if you know the risk, you will be careful not to put too much money in a stock, whatever is the stock. Okay? So you have this risk in your mind. So when you do something, you don't play as crazy, as a fool. Okay? You don't play as a fool. I just showed you some stocks, they go 80% down. Well, think about that you have 100,000 in this stock and tomorrow it goes 80%. You lose everything. But some people who have 5,000, this is his account. He put it in a stock, a crazy stock. You say it might go to 10,000, 15,000, 20,000. Why not? But the next day he lose 60% or 70%. It's over. It means all your money is gone. You should stop trading and 1 year, 2 years, 3 years, 4 years, have some money and come back. Because you can't begin trading with $100 as the people do, or $200. And some people they do crazy trades with a small amount, which is very good. If you are scared, do not put too much money. Put just little money that you are okay with it. You have $5,000 or $10,000. You want to put $200 or $500 in the stock. It's okay. It's okay. You try yourself, and if you know how to trade, how to buy, you will have a good thing. But don't put all your money and wait for luck. Luck and hope, it can come to someone, but it's not guaranteed, and it could be the opposite that happen. So if you are with luck and hope, your life as a trader will not continue like that. You will have a problem one day and you lose it all because you will have more greed. I see some people that they write to me and something before they put $50,000 in one dollar stock, or $2 or $3. They put too much money, it means, and they trade. They can lose a lot of money, but they do crazy stuff, and they don't want to think about risk. They don't want to. They say, okay, it's our money. I play the big game. It's okay if I lose it all. I don't care, because I'm not living from my account. I am just living from my job. Especially those people who have good jobs, they can make a lot of money each year. So spending 10,000, 5,000 playing with the penny stocks, it's just a game. Like you play games, you go online and play games, and you are addicted to games. Some people are addicted to penny stocks. Sometimes they make money, they double their money in one trade or two, they triple their money, but sometimes they lose and they struggle, and it's a way of doing business. But for people who want to make money steadily each year, you should not do crazy trades. Because do you want to make money steadily, or do you want to wipe out your account in a trade? So you should decide. You shouldn't be greedy when you are in trading. Yes, you are greedy in following the trend, or following a trade that it is good, and you put a lot of money and you are making money. Yes, because you are making money, you see it. But you put money and there is no trend, there is nothing, just because of the news, and you don't know that tomorrow it goes up or it goes down. This is a real problem. Okay, so guys, I think I have finished the presentation. So let's see what. So Pablo said, hi everybody. NASA said most of PEP and DEM occur in pink sheet over-the-counter stocks. Yes, but still these stocks that are listed, that are very, very small companies, they still they still do crazy things about these penny stocks. Mark Thera say, hi, I just subscribed to you email. I look forward to learn, teach how or low penny stocks, and they went into reverse split. Not good for me. Oh no, you say reverse split? No. Listen, I have Mag Thera. I have explained this reverse last week or the other week. Try to check my videos. But reverse, I will just give you a very simple explanation. Reverse split. Please, guys, understand that you don't lose anything in reverse split, penny stock or not. So I will show you. Now, penny stock, for example, let's say now it is $1. They do reverse. Understand that it is reverse split. And last time I have explained what does it mean. Reverse split, it means that the company see that one stock is too in terms of value is too cheap. They want to make their company look better. For example, they do 10 to 1. 10 to 1, it means if you have 10 shares, this is $1, this is the stock. Let's say XYZ, this is the name of the stock. Just an example. Now, how many shares you have? For example, you have 100 shares. 100 shares, it means $100. 100 shares. Just an example, okay? You own this. Now, they announce that there is a reverse split 10 to 1. It means 10 of your shares becomes 1. Okay? So how many shares you have? Shares. Each 10 becomes 1. So you will have only 10 shares. Now, how much is the one share? Is $10. So, did you lose money from the reverse split? No, it's your own money because you still have $100 in your account. $100 is the same as $100 you had before. So there is no change in your account. You don't lose. Why you said you lose? You don't lose. But okay, the only thing that changed is 10 shares, but the value has been 10 times. From $1, it becomes $10. Now, some companies, they do the split because they are scared that the exchange will kick them from the exchange. So the exchange, for example, they say to them, okay, if you go less than $1, your company will get delisted. It means the exchange will take this company out. So you say, no, don't come to us. We don't want your business. We don't want that your company is traded here because it is so cheap. We want some stocks more than $1, $2, $5, $6. That's why some companies, they do this. But in terms of money, there is no change in your money. So this, please, you should understand this. And there is another split, the normal split. As you can see, I have this year happens. It happens with Apple and with Tesla. Okay, Apple and Tesla. Both of them we see split. This is a 4-4-1, and this is 5-4-1. So here it was, the stock was $500 for Apple. If you have one share, you will have 4 shares at 125. So this is your price share now, but you have 4 shares. 4 shares. Now before here you have only 1 share of Apple. For example, you like Apple, you don't have money, you have only $500. You say, okay, let's buy 1 share. Now the split comes 4 for 1. It means if you have 1, it becomes 4. You will have 4 shares at 125. Tesla also, it did, I think, 5. I think, I don't know what's the exact thing. It was $2,000. If we say 5, it will be $400 a share. Just an example, okay? Because you divide $2,000 by 5, it will become $400 a share. And you have 5 shares. Now what comes after, if the stock goes down, yes, you lose money. If the stock goes up, you will be making money. But the split itself, it has nothing to do, it doesn't make, the price is always the same. It means you don't make money, you don't lose money from the split. So this is the normal split that, why they do it? Because they see, for example, Apple is too much expensive as 500. They want to make it attractive to other people, so they make it 125. So people who didn't buy before, when the stock was $100, it goes to $500. So they say to you, oh, okay, now it is 25, buy now. So this is just, they say it's an opportunity, but in trading, you will never know. Maybe 125 goes to $50. So this, you should take it in account because no one knows. But understand, but you bought it at 125. Maybe a lot of people, they like it. It goes to 200 this year, and you will make a lot of money. Why not? It goes to 500 after 5 years or 3 years or 6 years. So you will understand that all this depends on the future. But right now, it's what you see. Okay, guys. So Wiseman, thanks, Kareem, as always, to your time. Good night, everyone. I have early morning shift tomorrow. Thank you very much. Rabbit Bullfrog, we're looking to a trend opportunity to trade. Which time frame for a chart do you use? 1 week, 1 month, or 6 months? No, we use daily. I use daily charts. So I will just show you. I will show you one example. Okay. Now, do you see, for example, NVAX? Let's say I begin with here. Okay. Let's say I begin with this trend here. You see this trend? Now, I use daily always. I don't use weekly or monthly. Because monthly, you know, you don't see the going up and down of the stock. Because the stock is calculated daily. From day to day. Because this, if you change to week, see how it looks like. You see? It looks like this. So it depends on how you want to see the chart. But for me, you can use monthly. Okay, see here, monthly. But see the month. The bonds opens 145. It goes to 189. It goes down to $97. It goes up to 110 at the close. Okay, but this is very hard. You will never know what's going on inside. So this big thing that you see is not good. So you should do it as daily. Okay, you should see the daily. For me, I use always daily trends. So in a stock, I see the days. If there is for example, this stocks, as you can see, there is no trends. There is a downtrend here, yes, but most of the time, 1 day or two is not called a trend. A trend is something that continues to go up. Let's say this V cell stock, you see the trend. It begins from down, it begins here, and then it finishes. Then it goes down, up and down, up and down. So all these, there is no trend. Okay? Let's say there is a new trend here. It might continue up to 26, 30, 40, 50. It might be the same as this. But all this section here, all this section that it is here, the stock is doing nothing here. It's going up and down, up and down. If you buy and you wait 2 months, 3 months, 6 months, you are not making any money. But if you buy here, in a few days, 1 week or two, you begin to see the money. You see that? There is a trend here. Here there is a trend. Here there is a downtrend. Here there is a downtrend. If you have been here and you sell short or you buy put options or whatever you do, you will be making money because the stock is going down. Okay? So this is for you guys. Let's see another question. Rapid Bullfrog, stock split does not affect the market cap of the company. You will still own the same piece of business. The piece per share will change. However, your share count will still reflect the market cap. Yes, this is what I explained. Looks much better as a daily. Great answer. Yes, see, Rabbit, I have been following trends since 2011. So all my strategies is based on how to follow the trend, how to find the trends, and how. For example, this year we have done a great job with a lot of stocks. Tesla, Facebook, Apple, and many other stocks, even penny stocks. We have seen a lot of excellent trades with long trends. So, Rahmatullah Modi, how are you? He said, can you check WK HS? Yes. Now, yes, this is good. This is good example of the first. You see, this is the first example of the trend. Just to show you that sometimes when the market is doing nothing, it's better not to stay. Okay. See, for example, here, all this period from July 2nd to 4th of August, it means July and August. So July and August, 2 months, nothing is going on. But right now you see September is doing good because the market has begun and the trend has begun. It might fall, it might continue. This is up to the traders and that are trading, so we will never know. Okay, so this is a trend. This is a trend. Here there is no trend. So this is called trading into a range. It means you are not going to make any money if you are going to buy, sell. This is not what we do. I don't do that. I will not be in this stock in this period, in these 2 months. If I find, also I can't find it because my search will not find this kind of stocks here. It finds them here or here. Now here, no. That's why my strategies works in stocks, regardless of the company news and because I don't use company news and so. Okay. Magthira, I trading with Robinhood now. Would you recommend anything better? And if so, why? Which stock screener are you using now? Now, stock screener is not a problem, but you can use FinViz. It's a good one. There are other stock screeners, but stock screener is just a screener. And now it's my strategy. I follow some strategy. I use only one or two criteria, and I can use other criteria, but if I want to, what kind of stocks I want, what industry, what sector, what country, so I can IPO or not IPO. These are the information that I can search for according to what I do. Okay, Money cool, hi sir. So you said I trading with Robinhood now. Would you recommend anything better, and if so, why? So listen about thing. Robinhood or not. So I will tell you something that you can check. Okay. Now go to any stock in any broker. I'm not speaking about Robinhood. I'm speaking about any stock. Okay. Let's say we just give an example. Okay, it's not true. It is false. XZY. This is a stock. Now, in any stock, you should find what we call the bid and the ask. Now, this information I know you know, but I'm just trying to. The bid and the ask. Who is behind the bid and the ask? Is the guys who are called market maker. Is the guys who makes the market works. He buys from you and he sells to someone. Now, if you want to buy, you go to the ask. If you want to sell what you own, here you should own. Own or you don't own, it means you sell. So, for example, let's say $10. Here, $10, 1 cent. So this is the ask. The market makers asks you to pay $10, 1 cent to buy the stock for each share. If you accept, you hit buy and you buy. Now, if you own, let's say 100 shares, you want to sell, you sell them at 10 to him, and he will sell it to another guy. So that's why they make money. So this is normal. This is normal. But the thing is not normal. If you find this in a broker, this is the problem. The problem is that he showed you a price $10, but you don't know if this $10 is correct or not. Okay? You don't know. You should see the bid. At least if you have a stock you want to sell, you should know how to sell it. This is very, very important to see the bid and the ask. Okay? Because sometimes let's say he play the game of he sells your order to these market makers. For example, I will give you an example. Let's say if someone doesn't give you the bid, it means when you want to sell, it gives you just the ask. Oh, you want to, you say, you click, someone tells you, this stock is called the XZY. Oh, it's good, buy it right now, it's going up. You go and you open your broker, it says $10, 1 cent. But understand that this stock in real, it is, for example, $9.97, 95 cents. This is the real price. Now, your broker will sell it to you at 10.01. The market maker is getting 9.95 because this is the real price. So what does it mean? It means that your broker has taken 6 cents from your account for each share. Do you understand? So this is a big game. Now there is another game that most of the brokers are doing, is that what they do is the market makers, they have brokers that they sell the orders to them. They sell the orders to them, to these market makers. So who sells? It is your broker. He will not tell you that he sells, it's his business. He sells your orders. This is the order. It means what you want to buy. Now, this is the market maker. He will show you 10.01. But the broker will get some cents going to him, and the market maker will sell it to other people with more. Okay? Because always the market maker buys less and sell more. This is how do they do business. So when you say to me the brokers, most of the brokers now sells the orders because they stop doing commissions, because commissions, there are a lot of millions of people. They go to, for example, Robinhood. They take millions of traders. They go to him because he said that there is no commission. But Robinhood or any other broker. So I'm just giving you an information for those who don't know, who don't know about brokers. Listen, have you seen any business doing business, having customers? He make an account for you. He lets you buy and sell. He holds your information. He makes your tax, for this information that sends to you to do your tax. All this is for free. Where have you seen this? You are naive. I'm not saying you are stupid, but you are naive to see that it is free. There is no free thing in business. I'm not speaking about Robinhood. I'm speaking about all the brokers. The brokers are there to make money from whom? Is it from the market? Do they buy and sell stocks? They have millions of dollars. Why they don't sell and buy stocks and they make their own business? Why they ask you to buy and to have some money? Because they make money from you. You are the customer. So this you should understand. I can't explain more than that. But if you dig into it, the only thing that you should do is try at least you see the bid and the ask. Try to see them. If you own, how much you want to sell it. Okay? Because he can give you a low, more 5 cents or 10 cents down or 20 cents. He can do that. And you can lose a lot of money because of this, but you don't know. How can you verify? You can verify by maybe having 2 accounts, or by looking at NASDAQ. You see the price now, or something like that. Or you have 2 accounts, one in a broker and the second in the broker. You check them. Most of them you don't find them the same. Now, why you don't find them the same? Because they play with the price. They should, in order to make money, because they don't give you everything for free. You open an account, you buy and you sell. They calculate everything. They calculate your profit. They calculate your loss. They prepare you the papers for next year for tax. And you are staying there and you say, oh, it's all free. Where have you seen all free in your life? Where have you seen everything free? There is no free in business. Let's say in the market they say there is no free lunch at the market. So this you should understand good. Which broker do you use? Now I use E-Trade. Now it means I don't choose E-Trade. I was with another old one, which is a smaller broker called Options House. You have options, you have futures, you have stocks, you have everything. And then this option house was sold to this E-Trade. I am with E-Trade by force. It means I don't choose. It is just the company has been sold. Okay. So guys, we try to end this session. Thank you very much for coming. And please, if you have other questions, you can just go to my email. It's all in the description of this video or any video on my channel. Send me an email. If you want to have a free training about swing trading, you just go to my website, which is called Djellala.net, and you find the free free training and the free chart training. There is about this chart that I use. And if you want to check what I do, like in our portfolio, or you should follow us in our subscriptions, golden and silver and basic. Or you can order ebooks or training that I do about swing trading, about day trading, about investing, about a lot of stuff. So you just go there and check. Okay. So guys, thank you very much, and I am always here on Saturday or Sunday on the live, but sometimes I do videos. My channel is full of videos. There is too much videos. That's why I stopped making a lot of videos. And thank you very much, Magthira, and all you are here. And see you next week. Thank you very much. Good night.